Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So if you remember on the weekend, we agreed to keep an eye on the current level that in general still valid as a resistance, and chances that market could turn down from the 1820, 1820 to 22 area is possible. But at the same time, in the case of the upper breakout, we also will keep an eye on the 1835. And 50% resistance, and take a look at this cluster of different lines then, as lots of gold traders watch for the long-term moving averages. So we have here the 200 moving average, 200 days moving average, and the 50-day moving average. It's classic indicators that's usually watching for golden crosses, dead crosses, and so on. So here's what you can see is both moving average stands in the tight range. Additionally, around this level we have the daily level bar. So potentially that might be the level where market could stock and also start downward action. But first, let's keep watching what will happen around 1820. In general, the price behavior that we see today and yesterday, market keeps good chances to proceed slightly higher and taking out of the stop and complete some targets that we have. So first of all, is 1822 of the butterfly ultimate extension. As we already mentioned, recent performance was totally in a row with the setup that we have discussed in the weekly report. Market indeed has shown, based on our average T+2 pattern, downside drop, complete the grabber that has been formed here. So we discussed this in the weekly report, complete the ABCD target to the downside and start particularly at the 1790 confidence support. Up from there, it has formed the sharp reversal. So here simultaneously few bullish patterns have been formed. First of all, this is engulfing, and as part of this pattern you can see a reversal type of candle, because market created new lows and closed above the top of the previous candle, which is called as a reversal. Additionally, you could see the fake breakouts of this consolidation. So market could drop below it and return it back up. So that looks bullish, and potentially market should proceed higher at least to retest the previous top and reach the possible upper border of the same consolidation. So currently, based on recent performance, I wouldn't consider taking a new short positions by far. In hourly chart, you could see that's the performance that we discussed in the weekend. This is XOP target that has not been reached yet based on the same ABCD pattern. So that's it stands in agreement with the butterfly target on the follow time frame chart. Here's minor grabber has been formed. So potentially we could get some kind of the maybe A, B, C, D pattern to complete this target. For instance, maybe here's minor head and shoulders, reverse head and shoulders pattern will be formed right on top, or in minor A, B, C, D will finalize this XOP target. Whatever the shape price will take, current chances that market will proceed high and complete 1820, 1822 area is significant. This is the reason why we're not considering taking the new short position by far. Speaking for the long positions, well, it's difficult to say because, well, maybe if you already have the position, you probably could keep it. If you will see some minor retracement here, well, in this case, you also could try for taking the long position because of the, as I said, chance to reach the target stands significant. Here is also, you can see minor grabber has been formed that suggests a move above this area, so maybe we will not get some extended retracement. This market could show it as direct upward action. And then we will see what will happen, because it is important how market will behave around 1820, because XOP will be completed, market will stand around the daily resistance here, and we will see whether any bearish performance will start here. Because based on the monthly pattern that we have, market could start and turn down again, either from this level or maybe from this one. So usually the 30% and 50% levels are most common for retracement target in the case of the large engulfing patterns. So that's the levels we are keeping an eye on currently, mostly focused on this target. And let's see what will happen around it and whether any bearish signs will be formed around the 1820, 1822 area.